Welcome back to the Malaysia Money Matters Show. It's the 5th of September 25. Today, we're diving deep into the day's most important financial and political headlines, both here at home and across the globe. We'll unpack what this news means for you and, well, the broader economy.
Absolutely. Trying to cut through the noise, get to those core insights.
Exactly. So let's start right here in Malaysia. Lots happening. Property first.
Good place to start. Yeah, the market's seen a bit of softness first half of 25. Transaction volume dipped slightly, about 1.3%.
Right, but value was actually up a bit.
It was, yeah, 1.9% up, but new launches were down quite significantly, almost 46%.
So despite that softening, we're seeing some pretty big strategic plays, aren't we? Like Gamuda.
Definitely. Gamuda's partnering with Taylor's Education Group. They're redeveloping that prime SS15 site.
In Subang Jaya, a mixed-use project.
Exactly. RM 500 million. Service departments, but also, crucially, student accommodation, aiming for completion around November 2029.
That focus on student housing is interesting.
It really is. It shows a focus on integrated living, tapping into demand for well-connected modern spaces, especially near universities. It also pumps life and capital into older neighborhoods.
And then there's Eastern and Oriental,
Right. They've secured RM 780 million in financing from AmBank.
For Andaman Island, Phase 2. That's a huge project overall, isn't it? Budgeted at RM 4 billion.
Massive. And connectivity is key there, too, with that upcoming Gurney Bridge expected to really boost access.
So big investments, long-term thinking, even if sales for newer launches might be a tad slower than before. Demand seems solid, though.
It does. It signals, I think, a calculated bet on urban regeneration and infrastructure really driving future value.
Okay, moving on from property. Khazanah made a move.
Yes, Malaysia's sovereign wealth fund. They're no longer a substantial shareholder in FarmFresh.
Trimmed the stake quite a bit, from over 6% down to about 3%.
That's right. It could signal, a shift in Khazanah's investment focus, or maybe just rebalancing, freeing up capital. Always interesting to watch the big funds.
Definitely. Now let's talk tech and energy, some really forward-looking stuff here. Pentamaster?
Ah, yes, the Penang-based tech group. They've put US $3 million into Ahead Optoelectronics Malaysia.
For a 14.29% stake. And this is for expanding into optoelectronics and silicon photonics.
Precisely. These are, critical technologies for building the next generation of AI servers and data centers. That market's forecast to grow like crazy, over 20% annually.
Wow. So a local company really positioning itself at the forefront of global AI infrastructure. That's significant.
It absolutely is. It's a foundational technology play, using light to move data faster, more efficiently on chips. Very important for future AI.
And sticking with future tech, the renewable energy sector seems really active.
It's buzzing, yeah. Cita Global and its partners, they've been shortlisted for a huge floating solar plant, 200 megawatts.
At Chera Dam in Kuantan, poised to be Southeast Asia's largest.
That's the one. And separately, JKS Resources is developing 2 big solar plants in Terengganu, nearly 100 megawatts each.
And looking ahead, the next round, LSS6, might require battery storage systems.
That's the talk. Integrating battery storage is, a critical next step. It enhances grid reliability, especially as you add more renewables like solar. It's vital for stability.
So connecting the dots, Malaysia is really pushing to diversify its energy mix, strengthen the grid.
Clearly. And it ties into the Proton EV factory launch, too.
Right. The first one in Malaysia, in Tanjung Malim, a collaboration with China.
Yes. Starting with 20,000 EVs a year, aiming for 45,000 eventually. The PM highlighted how it aligns with Malaysia's energy transition and industrial plans.
A very tangible sign of commitment, boosting the auto industry through tech transfer.
Absolutely. It's all part of a larger national strategy taking shape.
Okay, let's shift to the broader economic picture. We mentioned the property market softness. What about with manufacturing?
The Federation of Malaysian Manufacturing, FMM, they see growth moderating a bit, maybe 3.5 to 3.6% in the second half of this year.
Why the slowdown?
Mainly higher business costs, some external challenges too. But on the flip side, economists expect Bank Negara to keep the OPR steady.
At 2.75%, right through 2026.
That's the expectation. It suggests they see enough resilience in domestic demand, maybe easing global trade tensions helping too. It provides some stability.
So headwinds for manufacturers, but maybe a stable rate environment helps cushion things overall. It's a balancing act.
It is. But there's another factor, a structural one, that an economist pointed out. The decline in worker union membership.
Ah, yes. Down from around 11% back in '82 to just 6% or so by late 2023.
That's a significant drop. And the argument is that this weakens workers' bargaining power, which could be contributing to sluggish wage growth.
Which directly hits household income, cost of living.
Exactly. It affects that balance of power between employers and employees, potentially impacting quality of life, a key underlying challenge.
Interesting point. And speaking of social structures, the government is looking to boost the third sector, NGOs, social enterprises.
Yes, the Economy Ministry plans to strengthen them under the 13th Malaysia Plan. The idea is to leverage civil society and social innovation.
As another engine for growth, moving towards a high-value economy.
That seems to be the thinking. Recognizing that the public and private sectors alone might not have all the answers for socioeconomic challenges. We might see specific incentives in Budget 2026.
Fascinating strategy. Okay, let's quickly touch on some international and political news that caught our eye. U.S. trade.
Yes, President Trump mentioned potentially having to unwind trade deals with the EU, Japan, South Korea.
This is related to a Supreme Court case about his previous tariffs.
Correct. An appeals court ruled many of them illegal. So if the Supreme Court upholds that, he's warning of negative consequences, suggesting unwinding deals might be necessary. Creates a lot of uncertainty.
And the U.S. trade deficit widened again recently.
It did, yeah. July figures showed a 4-month high. Seems companies were importing ahead of possible new tariff announcements. It just highlights the potential for significant disruption in global trade.
Which definitely impacts trade-dependent nations like Malaysia.
Without a doubt. Then there's the Google antitrust case in the U.S.
They avoided a breakup.
Largely, yes. And interestingly, the judge cited the rise of AI chatbots as a growing competitive threat to Google's search dominance.
Wow. So emerging tech is actually influencing legal rulings in major antitrust cases.
It seems so. It suggests regulators are really grappling with how fast technology, especially AI, is moving and reshaping competition. They only mandated limited data sharing.
Shows how quickly the landscape changes. And speaking of tech alliances, India and Singapore are deepening ties.
Yes, pledging more cooperation on AI and semiconductors, signing new industry pacts.
This is partly to counter U.S. tariffs linked to India's Russian oil imports.
That seems to be a factor. It's a strategic move, forging new economic alliances, building domestic tech capabilities like chips, especially when facing external pressures, a clear trend towards diversification and self-reliance.
Okay, back home briefly. Some important societal reminders. Sultan Nazrin's comments.
Yes, the Sultan of Perak urged the Muslim community to stop spreading slander and hatred online. A strong call for unity, moderation, emphasizing how it goes against Muslim manners and Malay customs.
A really poignant reminder about the impact of online discourse on, social cohesion, how digital platforms can amplify division.
Absolutely. And relatedly, Communications Minister Fahmi Fadzil threatening legal action against TikTok.
Over failure to address cybercrime. Scams.
Yes, citing insufficient moderators, slow responses. MCMC reported removing tons of content, but thousands of requests allegedly haven't been acted on by TikTok.
It highlights that ongoing tension, doesn't it? Regulating global platforms within national borders versus platform autonomy.
It really does. It's a constant struggle between national safety concerns and how these massive platforms operate.
And finally, on a sadder note, the passing of a fashion icon.
Giorgio Armani.
Yeah.
Passed away at 91. A monumental figure in Italian and global fashion, built and led his empire for 5 decades.
Truly synonymous with modern elegance, an incredible legacy.
Absolutely. His influence is just immense.
Well, today's deep dive really shows how interconnected everything is, doesn't it? From local property trends and tech innovations.
All the way to global trade disputes, AI's impact on law, and even how we manage online conversations. Every piece affects the puzzle. Staying informed, thinking critically, it's more crucial than ever.
Couldn't agree more. And that's our deep dive for today, giving you those critical insights to stay well informed. Make sure you subscribe to the Malaysia Money Matters podcast so you don't miss any of our future deep dives. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.